Good evening, Thursday, February 19th. It is 9:10 p.m. Normally, I like to record these in the morning or the afternoon. I've been busy, though. We've had, as you guys know, we've got some girls that are older now. My youngest, though, is just seven, going to be eight. I've got a 12-year-old boy, too. But my little guy's been sick. So we've been juggling things this week. And um, it's been a wild week too for the markets. I mean, just it's hard to believe, but the Rig Valaris merger, I mean, that's happened, or the Rig proposed Valaris acquisition has happened since I've done one of these reports, and there's tremendous volatility each day, in the market. So I wanted to check in this evening and touch on a couple topics. The first one is the four burners theory. I've been reading about this lately. That's basically where it says that in life you've got, like, if you think of four burners on a stove, you can only keep a couple of those going, and the burners would, in this case, would be family, friends, health, and work. And there's a lot of introspection where they're looking at different people and saying that, to excel at one or two of these, you have to turn one or two of the burners off. So it did make me think of that. I'm not necessarily sure that's entirely true, but it is. You do have to balance and juggle those things. You're, again, family, friends, health, and work, and oftentimes when you're excelling at one of those, it's to the detriment of the others. For example, you could be working and excelling at your job, but at the expense of maybe your health or your friends. So I just wanted to bring that up and talk about that. I've read a couple essays on that, and so it was on the top of mind here. Um, Speaking of work, there's a couple stocks I wanted to touch on this evening. One, Carvana is, that the I've often talked about the momentum stocks really peaked in October of last year, September, October. The Invesco QQQ Trust really peaked then too, and you've had a kind of a slow motion rollover in the market. We always like to say with especially the stocks, the equities, and the indices, that the tops are a process. And again, the spiders, SPY, and the QQQ, they're not down very much from where they were in October. There's a lot of individual stocks that are down a lot, though. Like OKLO is one that I bring up. It was a momentum favorite, the small module reactor company, and it had got above $190 a share in, at its peak in October. It's in the 60s now. Carvana was one of the momentum stocks that hadn't really broke yet, but it's starting to break down this year. And there was a short report by Gotham Capital that questioned the related party transactions, the selling of these loan packages that they put together, and the stock's down 21.1% year to date after today's drop. It was down 8% after earnings, and margins compressed. And there's more questions around, the structure of the company. So it was off the lows, though, from overnight trading. So there's still a reflexive kind of buy the dip there. But again, Carvana is one of these momentum favorites, and it does appear that structure in the market is losing the constant buy the dip bid. So I'm curious to see kind of where we go this year with Carvana, and if it catches up on the downside to some of the other momentum stocks, in terms of the losses. On the opposite side of the ledger, energy stocks have been on fire. Rig now is up 54% year to date, and crude oil is up 16.3% year to date. So the energy stocks have been moving ahead. Even when crude oil didn't have a bid yet, the energy stocks we're acting pretty constructive from a price action standpoint. The XLE is actually working on its ninth week in a row higher. It's up 23.4% year to date as of the close today, which is, again is Thursday, February 19th. There's speculation that there's a $7 to $10 premium in oil prices uh, in the market now because of geopolitics. Specifically, there's a anticipated potential attack on Iran that's built some premium into the Brent crude price and the West Texas Intermediate crude price. There's speculation that an attack could happen as soon as this weekend. I've been reading a lot about it. They said that from a military standpoint, the military could be ready by this weekend, but it would be more like mid March, where they would have all the assets that they need in the region and they would be able to reposition some of their defensive assets in. So, if mid March is 3 weeks away, we're February 19th today. So it's going to be interesting how that develops. And for the energy stocks in particular, if there's some type of resolution there, I would imagine there'd be a pullback, and maybe that would give a bid to the broader equity market, which has been under some pressure. So I would anticipate that, but there may be more of a lead up here, or the lead up could last longer, and you could see these little volatility, heightened volatility where you get sell offs into a weekend anticipating an attack and then it doesn't happen and you get a bounce. Or again, alternatively, if there's some type of negotiated deal, there is some fear built into the market, both in the premium for oil prices, but also there's defensive hedging, in terms of the structure of the market. So that's something to keep an eye on and be prepared for. So if that unwinds, you could have some volatility. But outside of that, there's a lot of there's been definitely a change of character in the market since October of last year. You're definitely seeing some of the out of favor sectors get bids. That includes energy stocks, even bonds. Have had a positive return year to date, and you're seeing value get a bid. I mentioned that the iShares Russell 2000 Small Cap Value Index is up roughly 10% for the year. I talked about that at the end of the last week in a brief note I put in live chat. So that's happening, as things like, Microsoft has lost roughly a $1.5 trillion of market cap from its peak, and you're seeing things like Palantir, which these were the epicenter of favorites in the market that are now struggling year to date. So money is coming out of certain sectors and it is rotating to value and commodities right now. And I expect that to continue. Again, though, I think that there could be a lot of volatility based around the geopolitical side. And if there is a $7 to $10 premium in oil prices in the market anticipating, military action, that could come out, if there's a resolution one way or the other. So just kind of be prepared for that. Volatility is par for the course. Volatility is opportunity. If you can keep an even keel and not get too flustered by it. But it's, high volatility, which we've had, for a while, is probably here to stay. So just be prepared, and I'll be back. I'm going to shave pretty soon. My beard is getting longer. So the next one, maybe, I'll have my beard shaved off. So hopefully you guys have a nice evening. Just wanted to check in and touch on a couple things. Think about in your life, are you focused? Where are you focused? For that four burner, stovetop analogy. Is it family, friends, health, or work? There's probably, if you're focused on certain areas one year, maybe it's good for you to focus on others the next, or just be aware of where your time and energy is going. So again, have a nice evening. Take care.